It's the end of the first week of January, and I bet a lot of you are thinking, did I miss the last episode? The answer is no, you didn't. I made the decision I was going to wrap the last week of the year with a year-end wrap-up, and it turns out that takes more time than I originally realized. So you're going to get the first week of January before you get the 2018 year in review. So let's jump right into it. And before you ask, I'm going to skip the 31st. That's going to go with last week and the year in review. And this is going to be just the first and through the fourth. It is Wednesday, January 2nd. Welcome to the first day of the 2019 trading year. And we started down, but ended up just a smidge, just a tiny little smidge. Decent way to start off the year. On pace for a huge up here if we just extrapolate this over, 200 trading days. Everyone's talking after hours. Apple announced some pretty weak revenue, and so everyone's making a big deal about it right now. We'll find out tomorrow what the market actually thinks of it, but for now, hard to say. It's Thursday. We got the down day that we thought we were going to get at the end of the day yesterday. Apple's down 10%, kind of led things that direction. Some more China talk, China. Companies that are exposed, a lot of revenue from China, not do well. We'll see if this materializes into anything. We're going to get company by company news. And we're even seeing some mergers and acquisitions activity. That's normal for a healthy market. So it's hard to say whether this is indicative of anything or if Apple just had a bad quarter, and that's the way it goes sometimes. We'll see how the weekend's tomorrow. It's Friday. Big day for the markets, up 3 or 4%. And big number. There was a lot of news. And the two main pieces of news were a really strong jobs report, huge number of jobs created. Actually, unemployment numbers went up because a lot of people entered the workforce. So if you've been waiting to start to see signs of that, starting to see signs of more and more jobs, perhaps next some inflation, wage inflation, everything's still looking pretty good. And then the other big news was Jay Powell came out and said basically what I understood him to have said all along, which was we're not going to raise rates very fast in 2019. We might pull back on quantitative tightening. I'll give you a little more on this when we get to the end of the week economic recap, but a little strange that the market would react so strongly, but I'm surprised that the market reacted on the negative side too. So this seems like the proper course correction. So 3 trading days and a pretty mean spread between the different indices, but the S&P 500 was up a little more than 1%, which means if we get that for the next 52 weeks or the next 51 weeks, we'll end up about 95%. Go ahead, pause your video. You can confirm those numbers. And looking at, pretty good start to things. Most of the news was actually economic related, so we won't spend a whole bunch of time breaking it down here. There were, again, 2 big items that we just kept talking about. So trade with China and then the Fed. What's the Fed going to do? So we'll jump over to economics. Moving over to economics, obviously a few big headlines, and start with the one that we're not going to address again. So China, until something new happens, it's not the thing moving the market. Obviously, talks happen, talks not happening is generally going to be a negative thing. When we get good news, it'll be good news. If we end up with trade war, that'll be bad news. But right now, we don't really have anything. Federal government shutdown. At this point, that's more of a pain in the ass than it is anything else. People not getting their tax refunds, that's going to be a pain. Starting to shut down services, that's going to be a pain. But I don't think it's really going to be affecting much. Moving to the pieces that are affecting things. Especially forward rate guidance. So Jay Powell talked at the American Economic Association meeting in Atlanta and moved the market 3 or 4% on Friday. And he said basically what he's been saying all along, which is he's going to look at the data, and if the data says we're getting a slowdown in the economy, then he'll lower the rates or not increase them as quickly. And we got an absolute boomer of a jobs report. 312,000 new jobs, huge number, non-farm payrolls, the specific number. And that was just blew things out of the water. It was funny, we actually got a little tick up in unemployment from 3.6 or 3.7 to 3.9. So we're even getting people moving into the workforce.
And then wage inflation, I think we're above 3% for the year. So, we'll want to see that sustained. If that drops back down, that's not necessarily an obvious sign that everything's going the right way. But seeing consistent wage inflation over 2% is definitely a sign that the economy is doing well.
Two links for you this week. First, got James Osborne of Basin Asset Management's 2018 year in review. And hopefully that'll tide you over from my video, give you something to read. I love his quarter end reviews. They're always very good. And then the other one from Scott Sumner, one of my favorite economists, give you something to think about interest rates. So his writing is, I think, some of the best stuff out there. And it's always complicated when you're talking about interest rates. Is money easy? Is money tight? The answer is almost always, it depends. I think this is a nice little article that kind of gives you that in a nutshell. It talks about what Donald Trump was looking for, who Jay Powell is, what should be surprising, what should be expected. So I'll leave you with those two links and have a good weekend.